Hey everyone, welcome back to Corporate Decoder. Today, Eversource Energy ES just filed its annual report for the year ending December 2025, and I'm seeing some interesting trends in their employee 401k plan assets. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report gives us a really clear look into where a big chunk of their employee retirement money is parked, and it tells us more about the company's financial health and employee confidence. Alright, so this document is an annual report for the Eversource 401k plan. Think of it like a detailed financial checkup for the retirement savings of Eversource employees. It shows us all the different places their money is invested, how much it is worth, and how it is changing over time. It is crucial because it reflects the company's long-term financial stability and employee trust. Let's dive into the financials. This table here, the statements of net assets available for benefits, shows us what the plan owned and owed at the end of the year. It is like a snapshot of the plan's total worth. As of the 31st of December 2025, the total investments in the plan valued at fair value were a massive $4,013,944,000. That is up from just over $3.5 billion the previous year. That is a pretty significant jump, showing growth in the plan's assets. A big portion of this is in common collective trusts, which reached $2,709,815,000 in 2025. These are essentially pooled investment funds, often managed by large financial institutions, and they are usually a stable part of a big retirement plan. What is really interesting is the Eversource Common Shares Fund. This is where employees have invested specifically in their own company's stock. This fund grew from about $508 million in 2024 to over $585 million in 2025. This increase suggests employees are either putting more money into the company stock or the stock price itself has gone up, which is a good sign for employee confidence in the company's performance. Now, let's look at how the plan's net assets changed over the year. This table, the statements of changes in net assets available for benefits, tells us about all the money coming in and going out. The biggest driver of the increase in the plan's value was the net appreciation in the fair value of investments. In 2025, this figure was $603,211,000. That is a huge increase from just $400 million in 2024. This basically means the value of the investments held by the plan went up significantly, likely due to market performance. And that is fantastic news for the retirement accounts of Eversource employees. Total contributions from participants and employers also increased slightly from $238 million in 2024 to $232 million and $22 million in 2025. This shows consistent participation and employer support. And on the outflow side, distributions to participants were $472,957,000 in 2025. This is a normal part of a retirement plan, people starting to withdraw their savings. Digging a bit deeper into the plan itself, we see it is a qualified defined contribution plan, which is the standard 401k setup. It includes a profit sharing plan and an employee stock ownership plan, or ESOP, which is designed to invest heavily in Eversource's own stock. This dual structure means employees have a direct stake in the company's success through their retirement savings. Interestingly, the plan has merged in older ESOPs from 1992, the TRASOP and PASOP, which means these legacy holdings are still part of the plan's structure. The plan allows for pre-tax, after-tax, and Roth 401k contributions, which is pretty standard. For 2025, the maximum participant contribution was $23,500, with an additional $7,500 catch-up for those age 50 and older. They even upped that for those between 60 and 63 to $11,250. Which is a great incentive for long-term savers. Employer matching contributions are quite generous. For 2025, Eversource matches 100% up to 6% of eligible compensation. This is a significant boost to employee savings. It is higher than the previous year's match of either 100% up to 3% or 50% up to 8%. This increased match, coupled with the higher participant limits, signals a strong commitment from Eversource to encourage retirement savings. Prior to 2025, the plan had a feature called K-Vantage, which provided an extra non-elective company contribution based on age and years of service. However, effective the 1st of January 2025, this K-Vantage feature was replaced by a new cash balance pension plan. This is a pretty big shift. It means that instead of direct contributions to the 401k plan, those benefits are now channeled through the main Eversource pension plan, funded by its existing assets. This could represent a strategic move by the company to consolidate its retirement benefit offerings. The plan also allows participants to take loans against their accounts. These loans are recorded at their unpaid principal balance, and in 2025 the total amount was $47,100,000. This gives employees a way to access funds when needed, though it does reduce their retirement savings. Now let's look at how these investments are valued. The plan follows a fair value hierarchy, which essentially categorizes investments based on how easy it is to determine their market value. Here we see a breakdown for the 31st of December 2025. A large portion, $2,709,815,000, is categorized as uncategorized because it is measured at net asset value, or NAV. This is common for things like common collective trusts. The total investments valued at fair value were over $4 billion. Of that, about $1.3 billion were classified as level 1, meaning their value is based on unadjusted quoted prices in active markets, like stocks. Another smaller amount, $13,218,000, was level 2. These are investments where pricing might be based on similar instruments or less active markets. Significantly, there were no level 3 investments, which are those with unobservable inputs, and are typically the hardest to value, so that is a positive. This next section, the schedule of assets, is really the nitty-gritty. It lists out every single investment the plan held at the end of 2025. Again, the Eversource Common Shares Fund, which includes employee stock ownership, is a major holding. At the end of 2025, its value was $601,416,000. This is a substantial amount and shows a clear concentration in the company's own stock. They also have significant investments in funds managed by Fidelity. For example, the growth company Commingled Pool Class F alone was worth $704,902,000. That is a lot of diversification into various growth-oriented funds. The total value of all investments listed here, including participant loans, comes to $4,479,823,000. This comprehensive list really highlights the scale and diversity of the plan's holdings. Interestingly, there is a separately managed account, managed by Boston Trust Walden, holding a variety of individual company stocks. For instance, Nordson Corporation stock is listed with a value of $1,547,000. This approach allows for more targeted investments in specific companies. This section talks about transactions with what are called related parties or exempt party in interest. This primarily means dealings between the plan and the company or its affiliates. As of the 31st of December 2025, the plan held over 9 million shares of Eversource stock, with a cost basis of $472 million. The plan actively bought and sold Eversource shares throughout the year. For example, they purchased $75 million worth of Eversource stock in 2025. This heavy involvement with the company's stock is a key feature of this plan. Finally, this section on risks and uncertainties is super important. It is where the company is legally required to disclose potential downsides. One of the biggest risks highlighted is the significant portion of assets invested in the Eversource Common Shares Fund, which is about 13% of the plan's net assets. This means if Eversource stock takes a big hit, it will directly impact a large part of employees' retirement savings. It is like putting a big chunk of your eggs in one basket. And while it can pay off big if the company does well, it is also a major risk if the company struggles. So, what does this all mean for Eversource Energy? The retirement plan is robust and growing, which is a positive sign. The increased employer match and participant contribution limits show a commitment to employee well-being, and the significant investment in company stock indicates employee confidence. However, that heavy concentration in Eversource shares, while potentially rewarding, also represents a substantial risk. The shift from K-Vantage to a cash balance pension plan is also a notable strategic change in how they manage long-term retirement benefits. What I will be watching for is how this concentration risk plays out. If the company's stock continues to perform well, these employees will be rewarded handsomely. But if there is a downturn, it could significantly impact their retirement nest eggs. And that is something to keep an eye on. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.